Welcome to the first episode of Stock Battle. In this episode, we are going to witness an epic battle between two giant media corporations, Walt Disney Company versus Warner Brothers Discovery. Please note that everything in this video is for general knowledge and informational purposes only and does not constitute investment advice. Always do your own research and consult with a qualified financial advisor before making any investment decisions. Let the battle begin. The Walt Disney Company, stock ticker DIS, owns many television and media networks, including ABC, ESPN, Disney Channel, FX, and National Geographic. Disney also owns famous franchises, such as Star Wars and Marvel's. Disney has its own major streaming services, Disney+, Hulu, and ESPN+. In addition to its digital footprint, Disney operates world-renowned theme parks, like Disneyland and Walt Disney World. Similar to Disney, Warner Brothers Discovery, stock ticker WBD, owns famous linear networks such as CNN, TNT, and TBS. Warner Brothers owns famous franchises like Harry Potter and DC Comics. Additionally, Warner Brothers also has direct-to-consumer streaming services named HBO Max and Discovery+. As of August of 2025, HBO Max has 125.7 million worldwide subscribers, compared to Disney Plus' 126 million global subscribers. Let us head to aistockpal.com to compare the two stocks' fundamentals. We are going to use the Stock Battle feature to compare the two stocks, Disney stock ticker DIS and Warner Brothers Discovery stock ticker WBD. We simply type their stock tickers into the search box and hit the button "Let the battle begin." Based on artificial intelligence, Disney is a better stock for long-term investment. Let us look at their most recent financial statements to see why. Disney has a much bigger market capitalization of $204.5 billion compared to Warner Brothers' $47.9 billion. This means Disney is more stable and more established than Warner Brothers Discovery is. Next, let's go to the income statement. Looking at the income statements, we can see that Disney's revenue is $23.7 billion compared to Warner Brothers' $9.8 billion. This shows that Disney generates more than double the amount of revenue that Warner Brothers does. Additionally, Disney's net income is almost 4 times that of Warner Brothers Discovery. Next, let's head to the balance sheet. Looking at the balance sheets, we can see that Warner Brothers Discovery has a lot more debt than Disney does. This indicates that Warner Brothers Discovery is a riskier stock than Disney is. Now, let's head back to the top of the web page. In this section on the right-hand side, AI StockPal provides a much more detailed explanation as to why currently Disney stock is a better long-term investment than Warner Brothers Discovery is. Head on over to aistockpal.com to read this explanation and to try out the Stock Battle feature yourself. The future of Warner Brothers Discovery is still uncertain, but its stock is worth a second look. Recent reports indicate that Paramount Skydance is preparing to make an offer to acquire the entire company for $22 to $24 per share, which represents a potential upside of 13.81% to 24.16% from the closing stock price on September 19, 2025. Making the situation even more interesting, some reports suggest that Netflix, the dominant player in the streaming market, is also interested in a potential acquisition. These new developments have certainly made Warner Brothers Discovery a compelling investment to consider. That is the end for this episode of Stock Battle. Please like this video and subscribe to our YouTube channel for future videos. Thank you for watching and have a great day.